Hey all, my name is Paul Borowski and I am the owner of Quality Business Plan, as well as the author of The Beginner's Guide to Understanding Financial Statement and Financial Ratios, which I've published on Amazon.com. And what I'd like to do today is give you all some tips and tricks on analyzing Apple's last 5 years income statement and balance sheet, as well as their financial ratios. So the way the video is going to work is I'm going to give you all a little bit of background about myself, and then I've picked out a few trends that I wanted to discuss and show you all some analysis tricks that I found were helpful when I do my financial reports for Apple and the beginner's guides for Apple as well. All right, so without further ado, let's zip through this little handy dandy PowerPoint presentation I've got designed for your listening and viewing pleasure. So like I promised, a little bit about me first, my experiences. I am a financial modeler. Specifically, what I like to do on my off time when I'm not writing business plans is to construct financial reports for various public companies such as Apple and Amazon and all those other wonderful companies. I do about 20 to 30 of those reports a year, as well as beginner guides. I am also an author, published author on Amazon. Specifically, Beginner's Guide to Understanding Financial Statements and Financial Ratios. So I've got a little bit of experience, to say the least, in analyzing public company financials. And then finally, I am an adjunct professor and subject matter expert for both business and finance. So I do have a little education background behind me. All right, so with that said, let's go ahead and get into some tips and tricks when analyzing Apple's income statements for the last 5 years. So for the first tip and trick, what I've come up with is analyzing revenues for Apple. Now, usually it seems pretty straightforward. Well, if the revenues are going up and the company's making money, then we're all happy and we don't have to worry about anything else. Yeah, that's definitely not the case. When you're comparing revenues or researching and analyzing revenues, the kicker is just because the numbers are going up, that doesn't tell us a whole heck of a lot. We need some kind of a guide or some kind of a comparison. And what I've done in my Apple company report is I've used the revenues and I've calculated the revenue growth. And then I'm do an analysis based on the revenue growth. For example, 2018 to 2017, we got a 15% growth, scrumdiddlyumptious. Into 2019, well, we're pulling back 2%. That's not very good, obviously. Then they do expand in their revenues 5.5%, and they really knock it out of the park. So Apple really goes to town. They just, I'm right in the wheelhouse, and they just slam it for a revenue growth of 33%. So overall, this is a 5-year trend of 13%, which is an above average growth for a multinational organization such as this. And also another good thing about this is last year's growth is pretty impressive. If they're able to continue to build upon that for the future, then investors and stakeholders alike should be delighted. However, there are some concerns with the revenues from Apple. First and foremost, they did dip in 2019. What caused this dip in 2019? I get it. In 2020, we have this little bug going around. But in 2019, there's something that really hit the revenues pretty good that made them step back and maybe reevaluate the world as which they see it or something. But they did have a dip. And the another thing that I was very concerned about is there's no consistency. We got 15% growth here. We got them pulling down 2%, bumped up 5%, and then they're knocking that out of the park in 33% for 2021. We're almost like wondering, what are we going to get next? Is it going to be feast or famine? So, those are some of the trends that I've identified for for just a revenue section of the income statement. All right, next is going to be the balance sheet. When I evaluated, again, the balance sheet for the company report that I've published for Apple in 2021, one of the trends that I did what I did see for the balance sheet item, what I'm drilling down on is the inventory. So for the inventory, again, we see the inventory, we see the inventory go down, it's going up, it's going down, it's going up. So it seems like it's all over the board. However, again, we do need some kind of a comparison to help us better understand how Apple is working with their inventory. And what I've chosen to compare it to is to sales. So inventory as compared to sales in 2017 was about 2.1%. They did decrease their inventory as compared to sales, which is great because if they're able to carry less inventory and still increase their sales as compared to sales, then that means they're improving their inventory handling procedures, which is wonderful. So they did pretty good here in 18. In 19, again, they did pretty good. They kept it consistent, 1.6% of sales. In 2020, they, again, right there, 1.5% of sales. And then in 2021, it went up a little bit, but it was not nearly as high as 2017 at 1.8%. So overall, just by looking at inventory, we don't know how they're doing, but when we compare it to sales, this has given us just a really good warm, fuzzy feeling that, you know what, Apple is really doing a good job controlling their inventory, especially in the last 4 years. They were able to not only manage it, but it seems like they've optimized it. They got a little bit higher in 2021, but again, a 4-year trend at between 1.5 to 1.8% of sales is pretty darn good in my most humble opinion. Not only that, but when we have low fluctuation in these trends year over year, that investors should perceive relatively low risk. It kind of means to us that they've got their inventory handling and their processes under control, and they've had it under control for year over year over year. Low fluctuation means low perceived risk. Low perceived risk means happy investors. And again, in my most humble of opinions. What's not so good, I had a little bit of trouble with that one. This looks like a yummy trend right here. It's consistent over 4 years. It's low. It's looking pretty good. I'm having a hard time coming up with something bad, and if I have a hard time coming up with something bad, I really don't want to look too hard at it, because it's looking pretty good on the surface. All right, and then next is going to be the financial ratios. For tip number 3, is focus on the financial ratios, specifically the total asset turnover. So when I evaluated this financial ratio when I was writing my report, I took a look at the turnover, total asset turnover, and the total asset turnover ended 2017 to 0.61, and then it grew, which is a good thing. As the inventory, the total asset turnover increases, it means that the company is generating more revenues with their assets. So this is a good thing. It grew to 1.04. However, compare this to a lot of other multinational organizations, this total asset turnover is relatively small, and it had me a little bit concerned. So what I did is I did a little bit of research, and I compared it to Microsoft. So in 2021, Microsoft was 0.5 inventory turnover. So Apple, they're spanking them pretty good. Compared to Google in 2020, Google was a 0.57, whereas Apple was a 0.85. So this is telling me that the industry as a whole seems to have relatively low total asset turnover. So that makes me it actually made me feel a lot better about Apple's total asset turnover. So just in summary, when I looked at this real quick, major concern that they're just not utilizing their assets to the fullest extent to generate revenues. However, comparing it to some industry competitors, that made me feel a little bit better about the whole situation. All right, so hopefully these tips and tricks in analyzing the income statement, balance sheet, and the financial ratios for Apple 2021 gives you a little bit of insight of what I provide in my financial reports and my beginner's guides that I sell on my website. So in summary, when you are analyzing Apple for financial analysis purposes, especially for the financial ratios, be careful with your formulas. A lot of financial professionals out there, they use a lot of different financial formulas. I can come up with some, different formulas for just about every one of those financial ratios out there. And so when you're analyzing it, if you're going to get my company report, make sure to compare my formulas that I publish in the company report with what your instructor expectations are to make sure that the numbers are going to line up for you. Also, remember, in financial analysis, beauty is almost always in the eye of the beholder. And what I mean by this is that when you're doing an analysis, for example, if a company is continually adding debt, more debt, more debt, and more debt, and reducing its equity, well, shifting its capital structure. And in my most humble of opinions, I'm not a big fan of taking out too much debt. And so I would say that is a bad thing. Whereas somebody else might take a look at it and say, well, you know what? They're making money on borrowed money, which is great, and they're continually to do so, which is even better. So that's a good thing. So just remember, if you identify a trend and you say it's good or bad, it doesn't really mean anything. Make sure to add some thoughts and ideas behind it, put a little bit more meat on the bone. And then finally, if you're looking for a guide or a financial report with you to help you with your financial analysis, please go ahead and go over to my website at qualitybusinessplan.com/Apple Company Analysis. And on that website, I do offer for sale a beginner's guide to Apple financial analysis. In the beginner's guide, I give you some analysis ideas and some tips on how to analyze analyze a company specifically for Apple. And then I also go ahead and provide you with the ratios and a summarized income statement and balance sheet. In the financial report, I provide analysis with some of the trends that I've found, and then give a letter grade for the analysis. So this right here, the beginner's report, does not have an analysis by myself, whereas the financial report for each line item in the income statement and the balance sheet for the most part, and also for a multitude of financial ratios, I do give you an analysis, identify some trends, and give you some of my thoughts and ideas as to whether they're good, bad, or indifferent. All right, so hopefully this information was helpful and delightful. If so, give me a thumbs up on YouTube, and as always, have a great day. Thank you.